Hey everybody, this is Greg Gossett, and today is Saturday, November 19th, 2022, and thank you so much for coming and visiting the Gossett Trading and Mentoring Weekend Review of my trades from last week. I hope you're doing well. I hope you had a good week. Hope you stayed safe there in this crazy market. Nice that the market's been going up a little bit. Last week was not such a monster week either way, up or down, a little bit of consolidation. But here is what we are going to do today. Here is the format for this podcast. First of all, we are going to run the U.S. legal disclaimer. Secondly, we are going to come back. We are going to take a look at all the trades that I made last week. I trade on multiple time frames. I have some trades that I'm going to show you on the weekly, on the daily, and on the monthly as well. And we're going to discuss why I entered the trade, or when I entered the trade, why I entered the trades, and most importantly, how I am going to manage them going forward. After that, we are going to spend a few minutes. We're going to talk about trader psychology. Actually, in this case today, we're going to talk about some possible trading words of wisdom. Also has to do with psychology as well. But trading psychology is the most important skill that you can develop in trading. The ability to plan a trade and then manage that trade the way that you intended without letting the ups and downs amplify your emotions and getting you off track. So, I say this every week, but it is so true, everyone. You have to be able to plan your trade and then trade the plan that you created without those emotions bubbling up to the top. In the long run, that is what is going to get you the money. After that, we are going to quickly go to my good friend Frank, who is a trading poet. He always posts a poem every day about trading, always pertinent to what's going on, and I think it's wonderful, and I always like to share that with you. After that, I have gone down through my watch list. I have gone down through the dailies and the weeklies, and I have identified some trades, both potential long trades on the daily, potential short trades on the daily time frame, some potential long trades on the weekly time frame, and then also some potential short trades on the weekly as well. And we've been doing really well. Last couple weeks, very grateful for that. Always good to be grateful when you're having some good momentum with your trading, and not get cocky, and really follow the rules. The two most dangerous times for a trader in my experience, and I have been trading almost 28 years now, are when you are doing very poorly or when you are doing really great. That's when those emotions really kind of start bubbling themselves to the top, and that's when you can really make some bad decisions to the downside if you're just like, oh man, screw it, what's going on, right? Or when you're doing really well and you start feeling bulletproof. Well, if you start feeling bulletproof and cocky, trust me, you better pump the brakes a little bit, step off the gas and pump those brakes a little bit, and take a look at what you're doing and realize that you've been fortunate enough to have a good move up or down, regardless, or depending whether you're long or short. But if you're doing well, take my advice, process what's going on, slow down a little bit, and be grateful for what's happening, but reevaluate and try to at a loss for words. That's unusual for me, but be grateful for what's happened and tighten up your process, I guess would be the best way to say it. So that was cumbersome. Anyway, boys, it's been such a long week with trading, and I've been teaching a lot lately, and so anyway, just trying to get into gear here today. So all right, first of all, we're going to run the U.S. legal disclaimer. I will be back in about 40 seconds, so hang tight. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right, here we go. Let's get started. New trade that I took on Friday, CNCE. This is Concert Pharmaceuticals. This is a company that I have, or a chart that I have been tracking here for a long time. I've been talking about it for weeks, and they have a new drug for hair growth for patients that have alopecia. And it's pretty amazing. I've shown pictures before. I mean, from nothing to a full head of hair. So do I want to just go ahead and buy it just because of that? No, I want to, I like the big picture of the company, but I wanted to be very patient and wait for some kind of legitimate signal. And the signal is this. I did go long Concert Pharmaceutical on Friday with this close under, close back over the 200-day moving average here. 200 days, a very good line in the sand. Institutional buyers, professional traders use the 200-day moving average as a support level that they can key off of. And the key to trading, as always, is risk to reward. Find your support levels, look for your entry signals, position size correctly, place your emergency stops, have your end of day stops. But in this particular trade, two things are going on. You can see Thursday we closed under the 200-day moving average. Friday we closed over the 200-day moving average. That was my signal. In addition to that, we also have a V2 entry signal as well. And as you know, I like to have confluences, combinations of indicators lining up on multiple time frames before I take a trade. It helps increase the probability of having a profitable trade. Doesn't have to be a profitable trade, but it does increase the probability. So V2 consider a V2 entry signal takes into account 3 bars. Bar 1, bar 2 has to go below bar 1, wash it out. Bar 3 here has to close above bar 1's close, and that happened. You can see bar 1, bar 2 goes below, washes out, bar 1, then reverses back up, closes above bar 3. So V2 entry signal, also a close under the 200, over the 200. I like multiple confluences on multiple time frames. So let's go over to the weekly, take a look. Well, look, on Concert Pharmaceutical, on the weekly, we came down and tested the 50-week moving average. So it did show that some buyers are coming in here both on the weekly and on the daily. Now, as always, whenever I set up a trade, I always have 2 stops, okay? The reason that I got into my trade, in this case, an under 200, over 200, that is the reason that I got into the trade. So my end of day stop is simply going to be a close below the 200-day moving average. But I also have an emergency stop that is always 2 ATRs, average true range is what ATR means. That basically means 2 standard deviations away from my entry based upon the current volatility. And so my emergency stop is down here at 407. That's 2 ATRs or 0.68 below my entry. Now, 95% of the time, I am not going to hit my emergency stop. I'm simply going to get out if it closes below the 200 on the daily time frame. But if it does get down, I mean Monday, if we just go rocketing down, I'm not going to be like, well, I have to wait for the end of the day, and because who knows how far it's going to go down, right? I with my emergency stop, I know exactly the dollar amount that I'm willing to lose. And let's go through that real quick since this is a new trade. So today, let's just go with a hypothetical $50,000 account, okay? If it's larger, it's going to be a larger number. If it's smaller, it's going to be a smaller number. But let's go with $50,000 account. A good rule of thumb for what your emergency stop, or in other words, what your maximum allowed stop is going to be on the trade, is 1%. So if you have a $50,000 account, 1% of that is how much? $500, right? So what I do, I take $500, I divide it by the value of the 2 ATR. In this case, it's 0.68 divided by 0.68, and it's telling me to buy 735 shares. So I have the signal, the under 200, over 200, and the V2, and it's also, by the way, a higher low close above the 200-day moving average. I'll switch back to that. Let me not get off point here. So we took the $50,000 account, 1% of that, $500. $500 divided by the value of the 2 ATR, 735 shares. So by 735 shares here, if it moves 0.68 down, then I'm going to lose the $500. Make sense? So, but my end of day stop is going to just be a close below the 200. Now let's hope that doesn't happen, but if it does, it does. I don't have a crystal ball, but I do have some support here that has shown me that I have some support underneath that, an important support level. So Monday, if it closes below here, I simply get out, most likely with a pretty small loss. If it's a horrible day, it gets down to my emergency stop, well, then I've lost 1% of my capital. Very unlikely, but it definitely happens about 5% of the time. And 1% of capital is not that big a deal. It's not going to wreck your trading account. Okay. Now I have the orange line up here. This is my trailing stop level. You know, I always talk about risk first. The risk is my end of day stop, my emergency stop, but let's talk a little bit about profit because that's the fun part of the trading, right? 1.5 ATRs above my entry, I will go into trailing stop mode, and then I will move things around, put on a tighter stop, right? Because now I have some profit. I don't want to give that all away. And, you know, I'm going to mention this at the end of the podcast, but I do want to point this out here. You know, I have a lot of rules with my trading, especially in the trailing stop methodology and managing the trade. Entering the trade, pretty easy, right? But as far as managing the trade, that's where I think the difference is made between people who really make money and people that don't make so much money or lose money, is in the management of the trade. So I have a lot of rules. In this podcast, I try to do my best to kind of give you a quick overview of what's going on here. But if you are interested in working with me, I do teach private one-on-one lessons in the evening time via Skype. I love to teach. I've taught people from all over the world and turn them into some really, really good traders. And in those lessons, I do teach you step by step all the trading approaches that I use. I use 5 of them, and I don't let you go until I know that you've I know that you really have comprehended and know these rules backwards and forwards. But I will mention that, but just right here, I do have an email in the link of my YouTube, of this YouTube video. Feel free to send me an email, and we can talk about doing the lessons together. So, all right, so that's Concert Pharmaceutical. Got in at 478, it's 482, so up a little on the trade there. Again, V2 entry signal, higher low, close back above the 200. Oh, I was going to mention higher low. I love higher lows. Higher lows always have the best results for me, and not every single time, but in general, they have the best results. I mean, look, here we had a close under and a close over the 200. Is that legitimate? It certainly is, but I have found that lower, see how this is lower than this low? So this is a lower low, close back above the 200. And, you know, there was some profit in there. Closed above, held, went up, and then Thursday came back down. But now look, now we have another close under, close back over. You see how this low is higher than this low? That's what's important. Higher low closes or lower high closes, if you're shorting, tend to give the best results and tend to give the possibility for a longer extended uptrend leg. So V2, close under, close over, emergency stop, end of day stops to close under the 200-day moving average. If we get up to trailing stop level, then I will go into trailing stop mode. So anyway, I've been very patient waiting for this particular trade. I like the company. I like the results of their product, of their drug. But one of the best ways to trade is having a good story with the particular company, and then also having a good particular technical setup, which we do here. So I hope that makes sense. All right, let's move on to Philip Morris. Philip Morris, boy, losing trade on this one. I did short Philip Morris here with rejection of the 200-day moving average. It also coincided with the third ATR channel. 92% of prices when they get to this third ATR channel or Keltner channel fail, and this was a confluence of signals where we bumped into the 200-day moving average above us, also bumped into the negative or the third ATR channel and failed. I did get short 94.10. My emergency stop is up here as always. My end of day stop is simply a close over the 200-day moving average. Next day gapped up on me. I was like, oh boy, came back down, closed under the 200. I'm still in the trade. Next day, tried to get above the 200, failed, down again. Next day, started moving my way, took a little profit. As you know, if you've been watching this podcast, whenever it moves the value of 0.45 ATRs from my entry, I always do take a portion off. I always like to take a portion of profit when the market gives it to me. Not everything, not the whole position, but just a portion. And I'm glad I did, because on Friday we closed above the 200-day moving average strongly, and I had to get out of the trade for a minus 2.31% trade. Didn't hit my emergency stop, did hit the end of day stop, however, and I did have to get out of the trade, but taking the partial profit here when I had it helped mitigate that loss. So this was a losing trade, minus 2.31%, and I am out of Philip Morris. Too strong. All right, let's go over to some weekly trades here. Weekly trades. All right, this was a great trade on IWM. This, of course, is the Russell 2000. 300-day moving average was my level, right? It was the level on Friday. Weekly trades always expire on Friday. It went below the 300 during the week, closed above the 300. That's my entry. Here's my 2 ATR stop, or emergency stop below. My end of week stop on this trade would simply have been a close below the 300, but it never got there, which is good, right? So it moved up here. You can see the orange line. That's my trailing stop level. 2 weeks after I took the trade, 2 weeks after I took the trade, did get to trailing stop level. Now I am in trailing stop mode. What does that mean? Well, just because I get there doesn't mean I do anything or have to take any action. It just puts me in trailing stop mode. So now I am looking for a close below a previous bar's low, and I will exit half of the position. So got your trailing stop level. Now did this bar close below here? No, it didn't. Next bar, did this close below here? No, it didn't. This week's bar, did this close below last week's bar? No, it didn't. So I am still in the trade. So currently this particular trade, entry to current price, up 8.99%. Pretty good. Microsoft, also a weekly trade. Why did I take the trade? Well, this is clearly a bounce off of the 200-day moving average. It bounced, held support, closed above, got in at 221.34. My emergency stop here, 2 ATRs below. Where's my end of day stop, or my end of week stop in this case? Simply just a close below the 200-day or 200 week. Has it done that? No, it hasn't. The very next week, of course, we had the big week after the CPI number, got up to trailing stop mode. I am also in trailing stop mode on the weekly on Microsoft. You can see this was an inside week. This week certainly did not close below the previous day's low. So next week, if we get a close below a previous bar's low, I will exit half the position. Alternatively, if we just have a big old move down and it closes below the 200-day moving average, well, I would get out anyway because that's my stop, right? But fortunately, this particular trade doing well, up 8.65%. GDX, okay, here we go. Now, this was a higher low V1. You remember how we just talked about a V2 with CNCE? Well, there's V1s and there's V2s. This is a V1. And by the way, if you'd like to learn more about V1s, V2s, if you go to my YouTube channel, I have a lessons playlist there, and you'll see a video called V1, V2 entries. Now, a V1 is different than a V2 in that it consists of 2 bars instead of 1. But look what we had here. Here's bar 1. Bar 2 goes below bar 1 and then closes above bar 1's close. This is called a V1 entry. I also like that MACD was positive when we took the trade, came into the value zone as well. And again, this is, higher low V1s, return to value V1s. Again, I teach these in my one-on-one courses, and they're really my bread and butter. So you should really look into V1s, V2s. At least watch that free video in my lessons playlist because they are great. They are really great entry triggers. So here we go. V1 entry, emergency stop down here. Now, where would be my end of day stop? In this case, end of week stop on V1. Well, do you see the entry bar, the second bar, the V1? This is called the washout bar. This line here, 2360, is halfway of the washout bar. From a Fibonacci standpoint, if we closed below that, that would be my end of day stop or end of week stop or end of month stop. And then I also have my 1.5 ATR trailing stop level up here. Next week, I mean, gold just went rocketing up. So I am in trailing stop mode up here now at 2810. So I'm also in trailing stop mode here, meaning that next week, if we close below last week's low, I would exit half of my profit. All right, this particular trade is up about 9.24%. So pretty sweet. Qs. All right. A lot of weekly trades. I know, I think it was my friend Steve Burns was asking people about what's their most profitable time frame. And I looked at mine and went back, and honestly, the most profitable time frame for me percentage-wise, weeklies. Definitely weeklies. I really like weekly trades, and you can see, these weekly trades doing pretty well. So why did I buy the Qs? This chart looks almost identical to CNCE. Higher low, close under, close back over the 200. Also a V2 entry, right? Where's my end of week stop on this trade? Simply a close below the 200. Where's my emergency stop? 2 ATRs below my entry price. Where's my trailing stop level? 1.5 ATRs above. So this one's going to be tough. I entered at 285.71. It's 284.82. Let's see. That is currently a loss of approximately 0.32%. So not too bad, not too shabby, holding the 200-day moving average. So I am not at trailing stop mode. And next week, if we close below the 200, simply get out. Of course, if I hit my emergency stop, simply get out. TLT. All right. Why did I buy TLT? Well, this is a deep dip buy. Also combination confluence of indicators where you see the V1, bar 1, bar 2 goes under bar 1, closes above, bar 1's closed. We also went under 30, over 30, right? Those are my entry signals. Place my emergency stop down here. I did get long based upon that at 97.70. The main entry signal here is the under 30, over 30. So my end of week stop would simply be a close back below 30. You can see it's 36. It's not closed back below. So that gives me still my long bias. I have my 1.5 ATR trailing stop level up here. Has not reached that. But so far so good on TLT here. Profit of 1.99%. New trade that I took on JO, which is coffee. And you can see coffee has really come down. I've highlighted this in podcast in recent weeks, but I was just waiting for coffee to come down to a reasonable level, give me a good level that I could key off of. And well, it happened on Friday. It bounced at the 200-week moving average, also near the negative third ATR channel. I like that. If we head over to the monthly, look at the monthly. Do you see how the monthly we're holding the 50-month moving average, right? So there's some support on that particular time frame. There's also support on the weekly time frame, and that's why I bought it. So bought at 44.28. It's 44.40. So this particular trade, these weeklies are about 0.32%, but just brand new. Is it scary buying down here with this big down move? Yeah, it is. But if you position size correctly, that should take you being scared and the fear out of it. Again, 2 ATRs below my entries, my emergency stop. I've already done the math, right? Calculated my maximum allowed loss. So yeah, if it gets down there, it looks like it's going to be a disaster, but it all depends on what your maximum allowed loss is. And if it's a small percentage of your account, it really shouldn't matter. 95% of the time, it is not going to go down here. 95% of the time, it's just going to be a small close or a medium close below the 200. Get out. Yeah, it's not fun. Hurts a little bit for a second, but the first loss is the easiest loss. Also up here, 1.5 ATR trailing stop level above. If and when I get there, I go into trailing stop mode. So this particular trade up 0.32%. Okay, that takes care of the weeklies. Do have a monthly trade as well. Here's the monthly trade. Let's take a look. All right, why did I take the trade? Pretty simple. Confluence combination of indicators, 3 of them, in fact. Can you see them? These are the monthlies. You take the trade on the last day of the month, close under the 200-month moving average, close over the 200-month moving average. That's one. There's also a V1 entry signal here. Bar 1, bar 2 goes below bar 1, closes above bar 1's close. That's the second entry signal. Also, negative third ATR channel here. We went under during the month, closed back over. That's the reason I took the trade. It's not that hard, folks. It's really not. And as always, where am I going to place my emergency stop? That's right, 2 ATRs below, way down here. If it gets down there, am I going to lose all my money and live on the streets? No, because I've already factored in what my maximum allowed loss is. Where's my end of month trade? Just simply a close below the 200-month moving average. Where's my trailing stop level? If I get up to 34.30, this particular trade doing well for Intel, up 5.64%. So I know there's a lot going on there, everyone, and you know, I do my best here to give you the high level of what's happening here. Go to my YouTube channel. There's lessons there. There's free lessons there. Watch those, and I think they'll help you as well. Okay, so those are the current positions, all doing pretty well. Let's head over and talk a little bit about trader psychology and/or good trading words of wisdom. This comes from Julian Komar. Follow him on Twitter. Great post. He's a professional trader in Germany. Been listening and watching his videos and his posts. And let's read what he has to say. Your job as a trader is to wait for the best opportunities. Money is made stalking and sitting, not being active and forcing a new trade each day. Oh, excuse me. Yeah, this is Julian Komar that posted this, and then Deng Zanger, of course, a very famous trader as well, mentioned this. And it's just so true. Your job as a trader is to wait for the best opportunities. Money is made stalking and sitting, being active and not forcing a new trade each day. Well, let's take a look at that. CNCE. I was doing exactly that. I was stalking the 200-day moving average. JO, I was stalking, or in other words, watching and waiting patiently for the level that I want. And that's exactly what Dan Zanger is talking about. Your job as a trader is to wait for the best opportunities. Money is made stalking and sitting. Let me read that again. Money is made stalking and sitting, not being active and forcing a new trade each day. Whenever I am patient, wait for the trade to come to me, wait for the level that I want, the chances of that trade being profitable go way, way up. And it just makes sense. I'm sure, you know, if you're listening to this, if you think about it, it makes sense. Just be patient. More patience, more patience, more patience. Wait for that level to come, and that's what you need to look for. Essentially, the more patience you have, the more money you're going to have. So how about that? All right. So thank you very much, Dan Zanger. Really appreciate that, and hope this was helpful for you as well. Okay, let's head over, do a quick poem from my good friend Frank. Great poet, great trader, great musician, great journalist. Please follow him at Franco D over on Twitter. Today's market poem. If the market is anything, it's honest. You can take part in it, but it makes no promise. It's true. Win, lose, or draw, approach it with humility and be modest. You got to respect the power that every money manager wants to harness. Great poem. One more time. If the market is anything, it's honest. You can take part in it, but it makes no promise. Win, lose, or draw, approach it with humility and be modest. Ugh, true. You got to respect the power that every money manager wants to harness. Great poem. Thank you very much, Frank. Please follow Frank over at Franco D over on the Twitter. Okay. All right. Gee, sorry, had a little technical problem there. All right, let's get back to possible trades for next week. This is what I'm going to be looking for. As I mentioned before, going to be looking for long trades on the daily, short trades on the daily, long trades on the weekly, short trades on the weekly. And here we go. Let's start with the long possible trades for me next week on Amazon. Usually I need a market to either go up further for me to get interested in or down further for me to get interested in. Here we go with Amazon. Amazon had a nice under 30 over 30, which is a deep dip buy signal. And in this market, we've had a lot of deep dip buy signals. Did go up nicely, okay, but now looking for next week, what I'm looking for, you can see the RSI is 39.22. I'm looking for a close under the 30 and or back over, or just a intraday rejection of the 30 RSI. We're at 39.22. Remember, I was just talking about stocking, right? Well, I'm stocking and waiting for Amazon to come down. The 30 RSI would put it very close to the negative third ATR channel here, and that is what I am looking for, that double confluence combination of an under 30 over 30 or some kind of rejection of a 30 RSI and in conjunction with the price being at the negative third ATR channel. So is it going to go down there? I have no idea. Can't force it to go down there. Don't know if it's going to go down there, but if it does go down there, then I'm patient, stocking, right, waiting for the trade. So just basically a rejection of the negative the 30 RSI is what I am looking for. It would also give us, especially if we came back down and tested this bottom, would give us a double bottom bullish divergence, meaning the first move down here had very strong downward momentum. We rallied into some positive momentum, but if we come back down here, depending how fast it is, and test this low here, or test the 30 RSI, we'll have a double bottom bullish divergence, which is, I think, one of the strongest technical indicators there is. I studied and learned this with Dr. Alexander Elder. So again, just waiting, patient. If it gets there, I'll buy it. If I get the price, if I get the setup I want, I'll buy it. If not, I won't take it. So that's what I'm looking for. Etsy. So Etsy had earnings, really strong move up. My gosh, strong. We've come back down. I am looking for a rejection of the 200-day moving average. That is my target. It's not there yet. I have to be patient and wait. I liked it. It's within the value zone here. You want to buy at value, sell above value. You want to buy below value, sell in value. Another thing I learned from Dr. Alexander Elder, but again, being patient, waiting for the price to come back down to the 200-day moving average, either a close under, close back over, or some kind of intraday rejection. But I like the fact that it is that would happen in the value zone because of what I just said. I like to buy in value, sell above value. A lot of people buy above value, get stopped out in value. It's completely the wrong way to do it. So on Etsy next week, just looking for a rejection of the 200-day moving average. Of course, I place my emergency stop, know where my end-of-day stop is, close under 200. Tesla on the daily. Well, there's been all sorts of drama, all sorts of stuff going on with Tesla, but I would really like to buy Tesla here. But again, I'm waiting for my entry. We're at a 3260 RSI. I am waiting for some kind of rejection of the 30 RSI on the daily time frame, and it would also put the from a technical standpoint, would put us near the negative third ATR channel. 92% of prices tend to stop going down and or bounce when we get near the negative third ATR channel. Look right here, negative third ATR channel, bounce. Got very close to the negative third ATR channel, bounce, right? But I am looking for a combination of getting near the negative third ATR channel and also having an under 30 over 30 RSI rejection. All right, let's switch over to some potential weekly long trades that I'm looking at next week. Remember, the weekly time frame or the weekly bar expires on Friday, so I would make my decision next Friday. Well, I think next Friday we're off, right, because of Thanksgiving, so it would actually, in this particular case, be on Wednesday would be the closing bar. Keep that in mind. So on Wednesday, here I'm looking at gold. Gold had a nice close under, close over the 200 on the weekly. It's a legitimate entry there. I did not take it because I already had GDX. But if we back test, if we backfill and come back to the 200 week moving average, either close back under and then close back over, that would give us a higher low, close under, close back over, or simply just some kind of rejection where intra-week we go below and close back over. We have a low here. We ran the liquidity to the upside. This bar here took out this high here, this swing high here. This puts us into a bullish market structure on gold, but now I'm just waiting for a pullback after that bullish market structure happened, and the 200 giving me a very well-defined line in the sand. So if it keeps going up, fantastic. I have GDX, that would be great. But if it pulls back, a simple pullback after the market structure has changed here is nothing to worry about, and it's just a good discount to buy. So next week, if we have a rejection of the 200-day moving average, or simply a close under, close back over, and ideally it would be very close to the 200, giving me a better risk to reward ratio. This one here I'd be hesitant to take because it's so far away from the 200. It's a little chasey, right? But next week, like for instance, if this week, I'm just manipulating this here, but if this week had done this, gone down a little bit like this and back up like that, see how close we are to the 200 week? That would have been perfection. That would have been lovely, but it didn't happen. But it certainly can happen next week, and that's what I'm looking for. So I'm looking for some kind of rejection of the 200-week moving average next week, Wednesday, which will be the last day of the week, and that's what I'm looking for. Alphabet, Google. Well, Google had a nice close under, close over the 200 on the weekly, totally legitimate, up a little bit from that trade. But again, looking for a little bit of a pullback, some kind of rejection of the 200-week moving average. Lyft, LYFT. Well, this one is at a 34.94 RSI. So, and keep in mind, we also have a double bottom bullish divergence here. Here's this previous low of these bars, the deep red MACD bars. We rally into green. Now we've come back down. We are lower than this previous low, but you see how there's no red bars here? That means this is a double bottom bullish divergence with a missing right shoulder, the strongest setup with double bottoms bullish divergences. It's showing that we're lower than we are over here, but from a MACD perspective, it's saying this is not a strong move down, and what it's really saying, the implication is that we're running out of downward momentum, we're running out of sellers, and the implication is that, or the indication and implication is that we would move up. But even though you have a double bottom bullish divergence, you still need some kind of trigger. The trigger would be a rejection of the 30 RSI. We are currently at 34.94. Meta. Well, under 30, over 30, under the negative third ATR channel, over the negative third ATR channel. Decent. Does not surprise me that this has not moved up so much, because you see this big down bar we have here, really big, strong down bar. You see how we rallied right to about halfway of that and then failed? Doesn't surprise me at all. From a Fibonacci standpoint, but we're at 33.90. What I'd like to see next week on Meta is the price to come down, retest the 30 RSI. That would be my entry, and that would also give me a higher low rejection of the 30 RSI, where this was a lower low. Higher lows, always better if you are bullish. Lower highs, always better if you are bearish. So simply next week on Twitter, on Meta, and under some kind of rejection of the 30 RSI, and ideally a higher low one. Nvidia. Okay, really nice trade. You had you came from a lower low, close under, close over, and boy, did it just take off beautifully. Do I want to buy it here? I certainly do not. What I'm waiting for again is a pullback to the 200-week moving average, either a close under, close over, ideally a higher low one, or just some kind of rejection of the 200. Then I would take the position size correctly, place my emergency stop, end of day stop, trailing stop, all that kind of stuff. all the stuff that I teach in my one-on-one lessons, and I'll talk about that at the end. But I just put myself in the position of someone new to this channel going, what are you talking about? Higher, low, this and that, and trailing this and that. If you take my course, you'll know exactly, I promise. But NVIDIA is very strong here. Really nice bounce, but it would be completely rational and normal for NVIDIA to have a pullback to retest that 200, and that's what I'm looking for. Last but not least, I talked about Tesla on the daily, but I'm also looking for on the weekly. What's going on here? Look at this. Pretty sweet. Negative third ATR channel, 200-week moving average. Is it there yet? No, it is not, but we're at 3510 RSI. You could have the trifecta of buying Tesla here somewhere in this area right here, where you would have a rejection of the 200, you'd have a rejection of the 30 RSI, you'd be the negative third ATR channel. And yeah, I know Tesla's a little out of favor right now with all the Elon stuff, all the Twitter stuff, but there's a level to buy Tesla at, right? There is definitely a level to buy Tesla at that gives you a good risk to reward ratio. And this is what I'm looking for. Let's see, 160.70. So it's still about $20 below. It doesn't have to get there. If it doesn't get there, I just won't take the trade. But if it does get there, just like I was talking about, being patient, waiting, this is probably my favorite trade of so far of whatever I've talked about today, if it gets there. If it doesn't get there, I won't take it. But if it does, I am definitely going to go. And am I going to load up, swing for the fences? No. I'm just going to take I'm going to take 1% of my trading capital, make that as my maximum allowed risk. And if it works, it works. If it doesn't, it doesn't. But I really like Tesla here, and that's what I'm waiting for. Okay, now let's take a look at some short positions back on the daily. Oops. Daily short, Greg. Here we go. Apple. All right. Well, Apple's been doing pretty well. Nice bounce off the bottom. But what am I looking for? I am looking for Apple if and when it does go up to the 200-day moving average, and if it rejects it, I will short the stock. So in other words, if it closes above and then closes below, I would short the stock. If it just during the day goes above, closes below, I would short the stock. Look at this trade over here, the last trade on Apple. Went above, closed below. That would have been a very good short signal in hindsight. But even without hindsight, look, if it just merely closes back above, you get out for a small loss. That's it. If it hits your emergency stop, that's fine. But look at this trade, right? It went above, closed below, and then kaboomy. So you're risking a very, very small amount to make something like this. Pretty amazing. So last time it rejected the 200 doesn't mean that this time it's going to reject the 200, but it puts me in a good spot for a good risk to reward ratio. So again, in a nutshell, if we have a close over, close under the 200, I'm short. If we reject the 200, I'm short. And it also would be a lower high. Remember how I was talking about higher lows for longs? Well, if it rejects here, then this high is lower than this high. Lower highs are always the best ones to short if you're looking for a longer leg down. So rejection of the 200 in one shape or another next week on Apple, I'm short. Southwest Airlines, LUV, same thing, everyone. 200-day moving average here. If it simply comes up, rejects the 200-day moving average, I will get short. Or alternatively, if it closes above, now I'm not going to do anything, but then if it closes back below, I would get short Southwest. PayPal, same kind of configuration, downward sloping 200-day moving average. Last time you see the rejection, it hit the 200, came back down. Didn't like it, was the ceiling, didn't like it, came back down. Lots of nice profit there. This might just keep going down, but if we get back up to the 200-day moving average, intraday rejection to 200 or a close over, close under, that would be my short. And then last but not least, on the daily shorts, silver. If we come back up, reject either the 200-day moving average, I get short. If it rejects to 250, I get short. If it rejects to 300, I get short. These are strong levels up here of resistance Doesn't mean that they can't get through them, but if the price action shows that it's having an issue with them, I get short. It gives me a good risk to reward ratio. If I'm wrong small. If I'm right, could have potential huge move back down. All right, and now let's go to weekly shorts. Amazon. You might say, Greg, weren't you looking at Amazon as a long? I was on the daily time frame, but if we get up here to the 300-week moving average and rejects it, then I'm going to get short. And in addition, you see the big down move bar here on 1028.22, big downward bar. Remember when I talked earlier in the podcast about coming back up, getting to a halfway of that from a Fibonacci standpoint? That's bearish in itself. But do you see how the halfway of this bar here, where I have the line, do you see how that also lines up perfectly with where the 300-week moving average is? So if we rally, reject the 300-week moving average, I'm short. Etsy. This would have been a legitimate short on Etsy yesterday on Friday. And why? Well, do you see how intra-week we went above the 200 and then closed back below the 200? That's legit. And then you see how we have a high over here, see how we tested it and then failed. So we had a false breakout to the upside, rejected the 50 and the 200, and close back below. This is totally legitimate. I did not take this, but it is totally legitimate as is. I am going to wait on Etsy to see if we get another test of the 200 and close back below, and if it does, that's when I will short the trade. Nike on the weekly short, 200 week right here above. You know, if it just continues and moves up and closes above it, I have no action on this trade. But if I get a rejection of the 200 on this next week, then I will short Nike. Walgreens. You see how the whole market is a lot of these stocks on the weekly time frame have this 200 above. That's a serious significant level of resistance. So I guess what I'm saying, big picture for the market, is that there's some really resistance up here. So if Walgreens does reject the 200-week moving average next week, I get in for a short. And then last but not least, everyone, is XLRE, real estate. We had a nice bounce off the bottom with an under 30 over 30, but the 200-week moving average is looming up here. So that is what I am looking for a short, some kind of rejection of the 200. And then quickly, let's talk about the indexes. And before I do talk about the indexes, I just wanted to talk about what I spoke of earlier in the podcast. If you are interested in private one-on-one lessons with me, just send me an email. Email's in the link of the description of this YouTube video. I teach a 15-hour course, 5 sessions, 3 hours per session. That's where you get your 15 hours. I teach you all 5 of the different trading approaches that I use. I'm very patient in my trading. I teach you step by step. And like I said, I've taught so many people from around the world, and I seem to have been very, very happy with the lessons and their results after taking the lessons. It does cost $1,750, but it's worth every penny, I promise you. I think the best way to learn anything is one-on-one with your coach or student or mentor, and that's what I do, and that's why I offer these in this particular form. So if you send me an email, I will reply. And I'll say, great, thanks for saying hello. Let's do a Skype call. Skype call is free. It's not a sales call. I just want to learn more about you and your trading challenges, goals, and it's a great time for you to ask me questions about the course. And then when we're done with the call, it will be up to you in the future. I'll never contact you again, but if you decide one day, hey, I do want to learn this and I do want to take these lessons with Greg, just send me an email and say, hey, I'm ready. Let's go, and we'll set it up. All right. Okay, let's take a look at just basically the markets here. Let's take a look at the Qs. Well, of course, we've had this nice big rally off the bottom. We do have the 100-day moving average here that definitely is acting as resistance. You see how we've rejected the 100 here a few days ago. In my opinion, right now, it's a bit mixed. Yes, we are in an uptrend technically. From a seasonal standpoint, from now until the end of the year is pretty good seasonally speaking. But I, we've moved up, but now we're consolidating, going sideways. So I would guess right now, most likely we're going to be choppy and moving sideways. So no real setups here on the cues that I would be interested in one way or another, long or short. Cues the weakest. SPY, stronger, certainly stronger, but you see the 200 day moving average. See how it coincides with the third ATR channel? Very, very tough level of resistance here. Some gaps over here, some order blocks over here, all sorts of stuff. My guess is that we go sideways. Diamonds, of course, the Dow Jones Industrial, stronger than anything. We are at least above the 200, but we're at a 66.79 RSI. My bias to the market at this point would be down, and that's why I was highlighting a lot of those short trades. I think there's more opportunity to the short side than to the long side at this point. And then IWM got to that 200 and rejected. So it would be great if the indexes could all get above the 200-day moving average, but right now a lot of them are struggling with that above, and the IWM has lost. Dollar, very important, everyone. I highlighted this abandoned baby island reversal bar up here, that was very bearish for the dollar, which, boom, boy, was it bearish, right? But look, we got near the low 30 RSIs. If the dollar moves up strongly, the market's going to move down. That's just basically in this environment, that is what's going to happen. So the dollar down, I had a friend of mine asked me, hey, I'm going to short the dollar down here. I'm like, I don't think I'd short the dollar down here. I mean, a lot of the move is gone. I think a lot of the fat is gone from this trade, and we are getting into these lower areas from an RSI standpoint, ATR channel standpoint. There's some gaps up here that I think are probably going to be filled, and therefore if the dollar moves up, then most likely the stock market will move down. It doesn't have to be that way, but that's kind of what I'm looking at. So that's kind of my read on that. So I'm going to leave you with a couple other things. I talked about my one-on-one coaching that I do. I also have a great online video course available at udemy.com. It's very affordable. It's like $12 to $15, and it's available at udemy.com. The link's in the description. But don't let the low price fool you. There is so much content there. I have a course called the Deep Dip by Stock Trading Strategy. 9.5 hours of video, 15 study guides, 26 videos total. And in that case, in that particular course, I teach you step by step exactly how to just trade that one strategy. And most of the strategies that we've talked about today, or most of the trade setups that we've talked about today, is exactly the strategy that I teach in that lesson. So the link's in the description. If you have some time this weekend, spend the 12 or 15 bucks, do yourself a favor, and take and watch that course. It will pay dividends way more than your 12 or 15 bucks, I promise you. And two more things. If you like today's podcast, I really would appreciate it if you could just hit the thumbs up button. It helps build the channel, helps keep the channel around, lets YouTube know there's some valuable content here. I would certainly appreciate that. But the most important thing, please try and go out and do something nice for someone today. I always try to make it a goal. I just think it's good karma. I think the world would be a better place if everyone could just go out, do one nice thing for another human being. If you could also go out and do one nice thing for an animal, I would certainly appreciate that as well. They would appreciate it. I grew up with so many animals, and they appreciate acts of kindness just like humans appreciate an act of kindness. So if at all possible, just try to make it a point, make it a goal to do one nice thing for another human today, one nice thing for an animal. And I think it's going to help you, it's going to help them, and I think it would just make the world a better place in general. So, okay, seems like I'm losing my voice here a little bit, and I think that's it for the day. I hope you have a really good rest of your weekend. And if I don't speak to you next week, with the podcast. I hope you have a really good Thanksgiving and have a great holiday. But if you have any questions or comments, please leave them in the comment section. I'll do my best to get to them. Thank you so much for watching. Thank you so much for investing your time here. I hope it is helping and paying some dividends for you. And so stay safe, create those plans, follow your plans, everything we talk about here, and just appreciate you being here. And we'll talk to you next week. And on the way out here, I have to run the U.S. legal disclaimer. Thanks a lot, everyone. Take care. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.